Hello everyone, George DeSantis here with a look at the market for the week ending February 9, 2018. As usual, let me put up the disclaimer, and I suggest you read it so that you realize that this is a video for purely educational purposes. Take what you can get out of it, but it's not professional advice. Let's begin to look at some charts. Now this weekend I thought we would start looking at the monthly chart of the S&P. We haven't looked at this in a while, but because of the change in the market structure now, I think it's useful to do that. So what we see here is a monthly chart of the S&P 500. Take a look at some of the things that we find here. This is the Bollinger Band, the upper Bollinger Band, 2 standard deviations, this dotted line. And you can see that we hit it and surpassed it. Now, I did recently change the Bollinger Band parameters from 2.72 standard deviations back to the 2 standard deviations, more conventional. And I wanted to see if we hit that 2 standard deviation band, and we did in January, probably accounting for some of this this correction here. Now what we have in February is a bearish engulfing candle. This body of this bearish candle totally engulfs the bullish candlestick here, the body of the bullish candlestick. And we also have this candle of February hitting the 1618, 161.8 Fibonacci retracement level. It seems like if it is attempting to hold at that level to give us a bottom at around this level here, that's to be determined. We can also notice that the close is now between the 4 EMA and the 9 EMA. Whether this also is an indication that we've hit a bottom, again to be determined. My guess is that we are pretty close to a bottom here, and it doesn't mean we should rush in and start buying stocks. I have sold a lot of what I owned. I sold them during the past 2 weeks, starting 2 weeks ago, but I am not buying all of them back all at once. I'm putting my foot in the water again, gradually testing the water, buying small positions. So if we look at the 3 moving averages, they are telling us that the trend is still up. 4 is above 9, 9 above 30. Now MACD has trended down, so we do have weakness in showing up in the MACD histogram. And force index, I put on Alex Elder's force index, which will be more instructive when we look at the weekly and daily charts. RSI 12 is trending down toward the 60% line on the monthly, and Williams percentile is now below the 20% line. But we can't really trade off the monthly chart, as Alex often says, and I agree with him. So let's look at the weekly chart. Now on the weekly chart, we get a slightly different picture. What we have here is we see that the 4 EMA is just about sitting at the 9. It's hard to tell from this graph because the candle is red, and also the moving average is red. In any case, what we can see here is that on the weekly chart, we closed above the 2 standard deviation line, or the upper Bollinger Band, and again we hit it in January, or rather 2 weeks ago. So that led to this pullback here, this correction. We can see that 1618 Fibonacci retracement line. We just about hit that and moved back up again. We closed a little higher than that. MACD became negative here. It went below the 0 line, and that's a bearish indication. Force index, it trended down. The RSI 12 is closing below the 60% line. All of these are bearish indications, of course, reflecting this correction that we've seen, we continue to see. So let's take a look now at the daily chart. Now on the daily chart, we can crunch the chart up a little bit. We can see here that parabolic remains above the recent bars, and especially the most recent bar last Friday. The 4 is below the 9, the 9 is below the 30. Now, in addition to these indications here that the moving averages are now telling us there's a downtrend, 4 below the 9, 9 below the 30, parabolic again above the most recent bar, we find that we've hit the 200-day moving average. So whether this will act as support is the important question now. Apparently, we have a hammer here, and we also have this bullish harami. This body of this bar is totally engulfed by the body of this previous bar. So there are some bullish indications, suggesting that we might find a bottom somewhere along the line here. However, we can't take that as gospel for now because we do have a downtrend on the daily chart. MACD is trending down. We will wait to see if it finds that bottom here. Now, I did plot force index, the 2-day force index, and what we find here is that we have a bullish divergence of force index, and in order to really see what's happening with force index, let me go back to a weekly chart. On the weekly chart, what I want to show you is that force index, and especially if we change it to 13-day, which is what we usually use, I learned that from Alex, change it to a 13-day average, or 13 period anyway, 13 week, and what you see here is that at least going back to 2016, whenever force index spikes down below the zero line, and we do have an uptrend on the higher frames or time frames of the charts. In other words, looking at a weekly chart, we know the monthly chart is still trending up in spite of the recent pullback. We usually get a rally after these spikes down of force index. And in fact, force index is showing us a bullish divergence at this level here. And we did get a nice rally after that. And if you look at every one of these spikes below the zero line, we get a rally. A spike below the zero line, we get a rally. Likewise here, okay, in August, September of last year. Now we have a big spike down again. And the big question then is, will this spike, which Alex termed a spike, it's his indicator, the force index, do we get a rally from here? Well, I don't want to bet the house on it, but it's probably the case, probably likely, given some of the other bullish indications we saw earlier on the daily chart. So that's what I wanted to point out here. This is encouraging, the fact that force index is now spiking down in a big way. Likewise, we see Williams per centaur is also spiking down, and there's a bit of a correlation between what we see on force index and what we see on the Williams per centaur. So let's pause here now. Let me collect my thoughts here to go forward. So let's summarize a bit. What we have is a monthly chart that's still on an uptrend because the moving averages are above each other, etc. We have a weekly chart that became very overbought. Of course, the general market became overbought. You can see it closed above the upper Bollinger Band with 2 standard deviations, pulled back for a couple of weeks, 2 weeks now, seem to be finding support at the Fibonacci 1618 line right here, and is now holding at about 2619. That's where it is now. We do have a spike down from force index, so we might see on the weekly chart a significant change. But let's look at the daily. The daily chart tells us that likewise we have some bullish indications. So if the daily chart continues to hold at 1618 on Fibonacci, then I expect a bottom to be found somewhere at this level, at the 1618 level. Let's move on to some individual stocks. Here's a daily chart of Apple. What we notice is this breakdown here that occurred way back here in February. Let's see, no, late January. We got a breakdown here. Notice, interestingly enough, the 9 crossed below the 30. The 4 crossed below the 9 a little earlier, of course. But look at this. At the same time, Williams percentile crossed below the 50. Now, I like to buy when it crosses above the 50 and sell when it crosses below 50 on the daily chart. So if I'm trading a stock, that's one of the sell signals that I use. A cross of the 9 below the 30. And this was a good time to get out here in retrospect, of course, but I didn't sell exactly at here. I sold somewhere here, somewhere in this area here. When the 9 crossed below the 30, see? This is where I sold. So now I'm ready to get back into Apple because I can see that it hit a previous low. If we crunch the chart, you'll see that. See, this was a previous low, and this is where it hit. It hit that previous low. And what do we have? A hammer. We have a bullish harami here and a hammer. So I'm looking to get back into Apple just as soon as I see a little more strength, and especially if the Williams percentile crosses above 50 again, and if we see this, if we see the 4 cross above the 9. Now, if you look at Facebook, we have a similar picture. We have holding a previous low, which is about this line here, right here, and we have a hammer, a bullish harami. So Facebook and Apple are two stocks that I'll be looking to get back into, especially when this crosses above 50, the Williams percentile. We don't have that much time left, but we can look at a few more. And here's Netflix daily chart, similar kind of a picture with a hammer, and now within the buy zone between the 9 and the 30. So we didn't get as much of a breakdown of Netflix as we did with Apple and Facebook. So this is another one that one might look to begin to accumulate again if you sold it, as I did some time ago. And here's Visa. Visa also broke down a bit, and we did get the 9 crossing below the 30 here, right here, at this level. But now it looks as though we have a bullish harami, just like we do with Apple and Facebook. And we do have a bullish divergence of force index here. So if you sold Visa, it may be a good time, or even if you didn't sell it, to add to Visa, because it looks as though we might be holding at this level here. And here's Microsoft, and we see a very similar picture. Another bullish harami. The body of this bar totally engulfed by the body of this bar. So we might begin to see some upward movement here in Facebook and in Microsoft as well. So all of these stocks are looking sort of like finding a bottom here with the rest of the market. Here's one that I owned for a while and sold it somewhere in here, an Alibaba. And we do have the same kind of, we do have a bullish harami here and a hammer. So we might see some upward movement in Alibaba too. But I'd like to see some of these other indicators showing some strength as well. We probably get that. Well, we're pretty much at the end of this. I wanted to spend more time on the general market today, since everybody's concerned about that. And, you know, it's anybody's guess what direction we're going to go into. But when I look at the technicals, I'm encouraged by what I see on the charts, that we might find a bottom somewhere around here, somewhere at the 200-day average. Have a nice rest of the weekend. We'll talk to you. We'll do this sort of thing again next week.